All right, looks like the recording is up and ready. Vince, take it away, my friend. It is all yours.
Great, thank you, Hubert. Thanks for having us as part of this event, and happy Thanksgiving to everyone. Thanks for joining us here on Black Friday. We won't keep you too long, but we've got a great presentation for you today. This is our winning momentum strategy, and let's get right into this. About us here at Trading Wins. Before we get to the strategy, we are a group of pro traders with well over 30 years of experience. We are real traders and teachers, and we've been developing our own strategies and systems and teaching people around the globe from complete beginners to experts. Now, today I'm going to share with you the same money management rules that myself and the other traders here at Trading Wins have been using for many years and continue using today. I'm also going to tell you exactly what you're going to need to trade the system and give you our winning momentum strategy step by step. We're going to go through it all. We're also going to have a live chart review. So when we get to this point in the presentation, if there's a symbol that you're trading now or you enjoy trading or are thinking of getting into, you can type the symbol into the chat at that point, and I will bring up my live charts. We can analyze it together, okay? And of course, we will try to leave as much time for Q&A as possible. A couple of quick poll questions for you before I get started, just so I understand who my audience is, and that way I can tailor the examples directly to you. If you can please type in your chat which market you do prefer to trade most. Is it stocks, options, futures, or Forex? Just take a few seconds and type that in. Appreciate it. Thank you very much. I see, well, there's a good mix. Several options, futures, stocks. Excellent. Thank you. I'm just going to take a sip of my coffee. Okay, excellent. And one more poll question before we move on. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? Again, please, if you can enter that in your chat, I'd really appreciate it. 50 plus, 100 plus. Wow, some very active trades. Several hundred plus. Excellent. Okay. I think you're going to like what you see today. As Hubert mentioned, we keep it very, very simple, but it's straightforward technical analysis, and it is something that has worked for many years and continues to work very well. Now, a bit of legal stuff first. Trading can be very risky if you don't know what you're doing, so you must educate yourself. Never risk money you can't afford to lose, and always arm yourself with education before venturing into the trading world. So on that note, let me get into our money management rules and share with you what we do here at Trading Wins. Number one, as I mentioned, never trade with money you can't afford to lose. I'm sure you've heard this many times, but it is absolutely true. This is one rule you should always follow. Also, trade with an amount that feels completely insignificant to you. For some of you, it'll be a couple of $100. Others, it'll be several thousand. The amount does not matter. What matters is that it feels completely insignificant to you, because it is so much more important how you manage a trade once you're in it than it is about selecting an entry. Okay, and I'll talk a bit more about that as we go through this presentation. Also, never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5% or even 2%. That way, you will still have a very sizable trade on, but will limit your risk considerably. Another rule we follow here is never have more than 50% of your account balance active in the market at any one time. Now, that may strike you as kind of odd, thinking we're going to leave half our account just sitting there doing nothing. The whole purpose of this is because there are so many factors when it comes to the markets that are completely out of our control. And one huge news event or catastrophic event, such as 9/11, that happens, and it takes the market down very, very quickly and puts you in a huge hole right off the bat. So this is twofold. Number one, it'll reduce the amount of loss you take during one of those events, but number two, it'll leave you with money there to trade with to recover from that event. And if you recall, 6 months after 9/11, the markets were right back to the highs they were before the attack. So it is crucial. And also, never place more than 2 trades per day. Now, that is if you do trade on a daily time frame. Obviously, if it's intraday, it'll be a bit more than that. But the whole point is, with the system I'm going to show you today, there will be plenty of trades to choose from. So I want you to be selective and pick the best of the best. Take the 1 or 2 best trades of the day and take those, spread them out. If, recently with some increased volatility in the markets, we have seen several days where the markets were up strongly one day, then down strongly the next, then back up, back down, etc. So on a day when the Dow is up 300 points, for example, S&P is up 25 or 30, you're going to get a lot of setups to the long side. And if you jump in with 10 trades all at once and the very next day the markets pull back strongly, again, you're going to find yourself in a big hole immediately. So the point is, spread them out, be selective, and take the best of the best. Now, a few other rules or goals we have here, and one thing I want you to write down and walk away with is this: you will never go broke taking profits. Okay? None of us have a crystal ball. We don't know the absolute end of that move that we're in, but as you gain experience, okay, you will be able to stay in a trade a little longer as you go. But especially if you're just starting out, bank those profits. Also, when you sit down to trade, leave your ego at the door. This is not about whether you're right or wrong. That's important, but it's all about how much money you make when you're right versus how much money you lose when you're wrong. Okay? Now, what will you need to trade this system? You can trade the system on just about any charting platform. Okay, there are 3 indicators that we will be plotting on our charts. Number 1 is a 20-period simple moving average. Okay, we've also tested this with weighted and exponential moving averages, but we just found the simple works best. Also, the Ichimoku Kinkin-Hoi, and excuse my pronunciation, I'm not sure if I pronounced that correctly, but it's a very widely used indicator over in Asia for many years, becoming a lot more popular here in North America recently. And I'm going to get into a lot more details on that, as well as the RSI, the Relative Strength Index indicator. Okay, those are the only 3. So any charting platform with those will do. There is no need to spend more money on new hardware or complicated software. Okay, if you're watching this webinar, you've got everything you need. Now, a few benefits of the system before I show you the actual setup. Number 1, it will work on any market. Stock, option, futures, Forex, okay, globally, any time frame, any price level. I will show you examples of each of these. Any trader or investor with any level of experience can use this. It is very simple, and it'll take you no time to get the hang of this. It has very, very clear entry and exit points, okay? And one of the real benefits is how little risk you will be taking with this. Once you see the setup, you'll understand. And most importantly, as with any trading system, it's consistently profitable. That is vital, and we have tested this, back-tested it, forward-tested it with real money for many years. We've been using this consistently. Now, let's get to the actual strategy. So, again, there are 3 components to this strategy: 20-period simple moving average, the Ichimoku Cloud indicator, and the RSI indicator. Okay? So I'm going to bring up my live charts, and I'm going to show you the actual setup. So just give me a moment to switch over. Okay. Hopefully everyone can see my charts. Now, a couple of things that might be obvious to you if you've traded with the Ichimoku indicator and the RSI indicator before, is they look a little different here. And that is because I've stripped them down. So I'm going to go into the settings for a moment and just show you what I've done. So the Ichimoku Cloud normally would look something like this. I'm going to plot these lines back on. Okay, I'm going to apply it. Okay, so normally it would look a lot messier. Now this is in itself a very, very effective indicator, and all these other lines here help you with the entry and exit, so support and resistance, etc. There's a method to this indicator that works very well. But because we like to keep things simple here at Trading Wins, what we've done is stripped it down, and really we only use it to identify trend, okay? And I'll explain in a moment. Also, the RSI indicator normally is used to identify areas of extreme overbought or oversold conditions. Normally, it has a default setting of 14, okay? But we have cut that in half. We've dropped that to 7. We want this to be a lot more responsive. So we dropped it to 7, and rather than having the oversold and overbought lines at 80-20 or 70-30, we've removed those and just plotted one right down the middle at the 50 level, okay? So that's why it looks the way it does. Now, let me just clean up the Ichimoku cloud indicator, and then we will get onto the setup here. Okay, so as you can see, it's much clearer, much easier to see. And so we've got the 20-period moving average, simple moving average in blue. We've got the Ichimoku cloud here, and we've got the 7-period RSI with our 50 line, or midpoint marked. So what we look for with the system, to begin with, we look for trend and momentum. The trend is easily identified by the cloud here. So if the price bars and the moving average are above the cloud, we are in an uptrend. Very simple. If the moving average and the bars are below the cloud, we are in a downtrend. Okay? Very simple. Now, there's one other crucial thing we look for before we look for our entry setup, and that is momentum. The way we read momentum is by the slope of the bars, or in this case, the 20-period moving average. That's what we use it for, to identify momentum. And I'm going to just draw this out for a moment. So when you take a trade, you can have slight momentum in your favor, you can have more significant momentum, or you can have very significant momentum in your favor. And the more significant, the better. It's like a wind at your back that just propels the stock forward. Same thing works to the downside. You can have slight momentum, lower. You can have more significant momentum, lower. Or you can have very significant momentum, lower. Again, the more significant, the better. Okay? So, now, as far as the entry setup goes, let me just clear off my drawings here, and I'll show you. So you have, once you have trend and momentum on your side, half the battle's already won. So in this case, you can see here that not only did we move from below the cloud to above the cloud, we did so with momentum on our side here. And once we have that strong momentum in our favor, what we're looking for is some kind of pullback, okay, where the RSI dips below the 50 line and then back above. And it is that point where it moves back above that is our setup. Okay? Just going to identify those levels for you. So one is right here. Okay? So that right there is your entry point. Okay? And now the difference between the setup and the entry is this. The setup is when you have momentum on your side, you have that pullback, okay, and you have the RSI dip below and back above. That's for a long trade. The actual trigger would be a trade above the absolute high of the trigger bar, okay? Now, if you do get that and you enter long, your stop would go just below the most recent low, okay? Just below the most recent low. And then there's several ways to manage the trade after that, which I'll talk a bit more about later on. So that is a long entry. And again, you can see that once you have momentum on your side, there usually are several pullbacks along the way, giving you opportunities to get in. Again, here was another one, right here. And this one's interesting because you get a second shot at it here, which is something else I want to show you. Now, oftentimes with this system and using the RSI this way, you will get what we call a double dip, or that little W formation. That typically results in a much stronger move to the upside. Okay? So there's two things. Number one, you don't want to really wait for that W to form. Once you get the first signal in, you can feel free to enter at that point. If you get a break above that high, the high of that bar, then you're in the trade. But if it pulls back and gives you this double dip formation, you can actually add to your trade if you like, okay? Or just have the comfort level, that the peace of mind that this is a strong setup and you made the right decision getting in on this trade. So that is the setup to the long side. And you can see that it happens over and over again. Let me mark this for you on the chart. Another one is right here. Okay? And again, if you put your stop just below the most recent low, okay, and then you can trail that up as you go. You can see there's another entry here. Okay? Now this one here, you can see that momentum had kind of gone sideways. The 20-period moving average had kind of flattened out. Okay? So the best setups to take are the ones with momentum in your favor, definitely. Okay, let's look at a few more examples here. Now, the same thing goes for short trades. Okay? Difference is you're looking for price bars and the 20-period moving average to be below the cloud. That gives you your downtrend. And now you're looking for significant momentum lower, which you certainly have here, whether you judge it by the moving average, okay, or even more so by the slope in the bars. Okay? Then you get that retracement, and it's at that point where, as long as everything remains intact, okay, you get the RSI moving above and then back below that 50 line. Okay? There's your entry short. Okay? And your stop will go just above the most recent high. Okay? And then it becomes a matter of managing your trade. In this case, with Semantic, later on, about a month or so later, trend turns, and it's now in a solid uptrend. What you do is wait, have that momentum on your side, wait for that pullback. What do we see here? We see another double dip. Okay? Real nice entry right here, and off it goes. It dips back again. What you notice, it does not breach the previous lows. So if you're trailing this with a stop, you'd be in this the whole way. And you see here, here's another entry. I'll mark that for you here. Okay? So there's several, usually during a sustained trend, there's several opportunities to get in these moves. Okay? And risk is very low because of that momentum on your side. You're going to see a lot more winners than losers, but even when you do, it's just the most recent low, and in most cases, it's not very far away at all. Let's look at American Express. Similar. Now, one thing I want to highlight for you, usually it makes a big difference with this strategy. When you see momentum going from a strong momentum on your side, going from below to above the cloud, okay, you really want to pay attention to that. Those usually lead to some very strong moves. Now, here again, here's back here on your left is a perfect example of another double dip that worked out very, very well. Okay, right here. Now, not all trades are going to be winners. I'm not saying that by any means. But when they do work out, you can see here, you had an entry point here at the first cross above the 50, and then it had one day of pause and then another move in. That double dip resulted in a very nice, strong move. Let's look at Baidu here. Again, when you move from below the cloud to above with momentum on your side, then it's just a matter of waiting for those retracements. Okay? And there's another double dip, resulting in a beautiful move here. Now, earnings was in here. But even before earnings, there was about $15 of upside here before earnings. You could have gotten out of this before earnings with a very nice profit. Okay? It's that momentum that tends to carry you. And here's another one recently. If you got in on this one on Biden, you'd still be in on this trade. Let's look at MasterCard here. Again, it's that trend in the momentum. Look at back here. When that momentum was in place, all you do is wait for that pullback and that crowd, that dip below and back above. So now, once you're in a trade, okay, you no longer look at the RSI. Don't get confused. Don't worry about whether it takes another dip below or not. Once you're in that trade, you focus on managing that trade using your exit strategies, which again we'll touch on a little later on. But that in a nutshell is the strategy, and there's plenty of examples here. Here's Tesla. Here's an example, and another thing I wanted to point out is even if it just comes back to kiss that midline, okay, just touches it and bounces, that is enough. It doesn't have to clear by a certain amount of distance. It does not have to dip below a certain amount or not. It's just got to come back to that line and bounce. And what's key is that the momentum remains intact. Should the moving average go flat, okay? Because if the bars move well below the moving average, if that retracement is a lot larger than expected, then you'll lose momentum there, and that you want to avoid. Okay. One other thing is when you do get a setup, and if, for example, here on Tesla, okay, we got the setup. Now, for the trigger to get us in the trade, we're looking for a trade above the high of the trigger bar. Okay. If, for whatever reason, it trades below the low of that bar first, then this trade is negated. Okay, it's disqualified. We no longer look at that trade, and we move on to look for other trades. The reason being is, if it does that, the momentum that we were counting on is obviously not as strong as we at first thought. So we abandoned that trade. I'll show you one more stock, and then I'll show you some Forex and futures examples as well. Excuse me. So here's Nike. Okay. Again, Nike, once we're above the cloud here, what we're looking for is that momentum in our favor. Okay? Once we get that momentum, then our focus switches to the RSI, and we're looking for that dip below and then back above. Okay? In this case here, it happens on earnings, so we'd probably ignore that. But this one here, you can see that even though it dipped below that 20, the 20 never moved. Okay? That momentum was still in place. And in fact, we got an enormous move of that, which you'd still be in this trade from here. Let me show you. Right from this bar. Or it'd actually be the next bar over, because to trigger you in this trade, you need a trade above the high of this bar. Okay, you got that. Your stop will go just below the most recent low, and then you trail it up. And this has been an enormous run in Nike. Now, for you Forex traders, let's look at the Australian CAD pair here. And again, nothing changes. Just because you're switching from equities to futures or Forex, okay? It's straightforward technical analysis. Same rules apply, same settings on the indicators, nothing changes. You're looking for that cross, not the cross, but when you have a cross from below to above the cloud with momentum, that should get your attention. And once you have that trend and momentum in place, you're waiting for that pullback, your focus switches to the RSI, and once you get that dip below the 50 and back above, which we got here, that's your entry, okay? Then, of course, you're looking for your trigger, which is a trade above the high of the setup bar. And once you get that, you're off and running, okay? So it works exactly the same way. Here's the EuroCAD. Okay, works to the upside, to the long side, here. Okay, and at any of these points, you can see here, even when you get a bit of a move against you again, as long as it doesn't breach the previous low where your stop would be, Okay, there's your next entry right around here. Okay, you see what happens next. Then switches momentum. We're now in a downtrend. The bars and the moving average are below the cloud. You have very strong momentum lower or slope lower. You get a pullback from below to above the 50 line and then back below, and that's your setup. Trigger would be on the very next bar when it breaks the low of the trigger bar, okay? And off it goes. So now, futures, same thing. Look at this move in oil recently in crude. Just been getting annihilated. Again, it's that momentum. You can see that momentum was already in place when we were crossing from above to below the cloud. Okay? Then once we have that in place, your focus switches to the RSI and you're waiting for that first pullback, which comes right around here. Okay? Now, if you put your stop just above the recent high, you can see that even on the other pullbacks, that does not get taken out. And of course, the whole point here is to scale out as you go. Okay, but there were many points here that you could have gotten in on throughout this move. And in this last one here, you'd still be in this move. It's been quite a move. It's been incredible on crude. Let's look at the euro. Same thing. During this whole choppy sideways period, not much to do. But once you have a clear trend and that momentum on your side, you're waiting for these pullbacks. There's one there. Okay? Clearly stated by the RSI. And off you go. And then again, you get another opportunity here and here and here. Okay? So, and more recently, right here. Okay? Right now. You can see today it's following through on that move and actually triggered a trade lower here on the euro. Okay. Now, I'm going to ask our coaching coordinator, Raul, to come in and help me read off some symbols and questions. I notice many of you have questions. This is the time where if you want me to look at a particular stock, type in a symbol. Raul will help me read it out, and throughout we will try to answer some questions for you.
It's always a pleasure to join you, even though you got me up on that Black Friday. I could have been out getting my
Kept you from shopping.
Getting my 1,000-inch TV, for $50.
That's right.
All right, let's start with Scott B. He wants to know about Lowe's.
Lowe's. Okay. Let's have a look at Lowe's. Oops, I messed up in the rest. There we go, Lowe's. So, again, what are we looking for? Quickly and easily, you want to identify the trend. How do you do it? By the bars and the moving average being above the cloud for an uptrend, or vice versa for a downtrend. So once you have that, you're looking for momentum or that slope. Okay? Then you're looking for a pullback. So you can see here on Lowe's during this period here, it dipped back below the 50 here on the RSI, but at that point it had gone flat. It had lost its momentum. So you want to avoid that. You want to be patient and wait for more. Even during this pullback here, again, momentum was not in your favor. All right? So this pullback just didn't happen to come back far enough. So this is going to happen. Don't worry about it. There'll be plenty of trades to choose from. You can see back here on Lowe's, once it did, once we had a clear trend below the cloud and we did have momentum on our side, you can see here, okay, was an entry, okay, same with back here, okay. So that's how it works for Lowe's. We'll have to wait for more of a pullback. Momentum is in place, trend is in place. Our focus now shifts to the RSI. We've got to wait for a dip below and back above.
Vince, there's a lot of symbols. I'm going to go through them quickly. Folks,
Sure.
I apologize in advance if I don't get to yours. Wendy wants to know about Tesla.
Sure, let's have a look at Tesla. Tesla, again, as of right now, it is in the cloud. There is no clear trend in place for us. So for that reason, we hold off and we wait. Previously, you can see how well it worked here. This is one we had marked earlier as one of my examples. here, once we have that trend of momentum in our favor and it does not change during the pullback here, then our focus shifts to the RSI, and that's what gets us into the trade. Okay?
Rick's asking about a company that my kids really love, Netflix.
Netflix. Yeah.
That company's making money hand over fist because of me, you know that.
Yeah. You're not the only one. So here, Netflix, more recently, it took on its last earnings a much greater drop than anyone could have expected. This was huge. Never in its earnings history did it drop that much. But because of that, we had that strong momentum to the downside. Now, when it pulled back up here, right in this area here, okay, you can see that momentum was still in place right here. Let me see if I have the right tool there. I'll mark it for you. Right in this area, okay? So that was your setup bar right there. Momentum was still clearly in place, and you had that move above and back below on the RSI, and that would have been your entry there. Now, this is the situation here where since you have such a large gap, okay, where you're going to put your stop just above the high of the trigger bar here, because there's no other bar. To go to a previous high would go all the way up here, which would be insane. That's way too much risk to take. So your stop would go just above the high of that trigger bar right up here. You can see it was never been triggered, and the stock completely rolled over after that. I believe it was about a $40 move so far to the downside. But so far, it's still just moving south. You need to wait for another pullback here for another entry.
Jack wants to know about J&J.
Sure. Let's have a look at J&J quickly. Oh, this is one of the first examples that we used. So right now, more recently, again, you can see that there was a cross below and then back above on this pullback. But look at the 20-period moving average, right? Kind of rolling over, kind of flattening out. So it's not the highest probability trade. Now, there are actually other things I'll talk about in a moment that can actually reinforce this and make it a much more powerful setup to use. But one of the key things to keep an eye on is that slope in the moving average. Okay?
All right. Now, everyone needs to know that you got a new phone. You finally retired the BlackBerry, right?
That's right.
You got Samsung.
Yes.
Why?
4.
Because everybody wants to know about Apple.
Apple. Everyone always wants to know about Apple. Apple's been a great stock. And
that was from Linda, Brian, and Gerard.
Sure. So, again, now, you clearly have the trend in your favor here, right? Very easy to spot on the chart because of this cloud. You have bars and moving average above. And so you're just waiting for those retracements here and the dips below and above. And here's a perfect example of one here, another double dip on the RSI in this area here, okay, where it gives you a very nice entry. Never does take out your stop, and it continues to move higher. So here recently, similar to Nike, it's just been on this incredible run with no pullback at all. We've been waiting and hoping for a pullback here in Apple. Hopefully we'll get that soon. Just now that you have this picture in place, your focus is on the RSI here, just waiting for that dip below and back above. And off you go.
A couple of questions.
Sure.
A couple of people want to know, does this work on different time frames? Rita's saying, does this work intraday? Max is asking, what time frame do you recommend for this kind of strategy?
Sure, it does, and I can show you a few. My favorites are the 15-minute, the 1 hour, and the 4 hour that work very, very well. You can see here on Apple, all throughout, again, same thing applies. Even though you're switching time frames, you do not change the indicator settings or anything else. Everything stays the same. Again, you can see that there were entries back in here. Mark it for you. Back in here, okay? 2 different times, and off it went. Again, you need that momentum on your side. So here where it flattens out, even though the trend is still in place, the momentum is not. You ignore it. You wait for that momentum to come back, and right in here are a couple of other opportunities to get in. Okay, very nice. And more recently, up in here. Okay, so you don't have to wait long for the setup to occur. So be patient, and again, select the best of the best.
I've got time for 2 more, then I'll let you get back to your presentation.
Sure.
RT wants to know about Walmart.
Walmart. Okay, so I'm in the hourly here again. Here's several opportunities to get in. You can see them, how well it works. Let me show you just 15-minute. Let's see if there's anything on the 15-minute. Again, during this period, fairly flat. Go to the 4-hour, and here's slight momentum on the 4-hour. I guess I could put more history on my chart for that, but let's look at the daily and look at Walmart. Wow, another incredible run here on Walmart. So again, you can see here's a great example here when everything lines up. Okay, never only look for 1 or 2 of the conditions. You have to have all the conditions in place. And here you have price bars, moving average above the cloud. You have momentum on your side. You have that dip below and back above on the RSI, and off it goes. Here it is from here. And you have a couple of different opportunities. That's the other beautiful thing about this setup. If you miss the initial one, it typically gives you a second opportunity to enter before it takes off. Okay. One
Roxy.
more.
XONE.
Sorry, XONE.
NE.
Okay. So clearly, it's talking the downtrend. Very simple, quick to spot. Now your focus shifts to the RSI. You're waiting for those pullbacks. In here, you were kind of losing momentum, so this was questionable. But right in here, you had that momentum again. Right here, and see, you get a very, very nice sharp move lower. The other thing I haven't mentioned is, if you haven't already noticed, typically once it triggers, it tends to move in your favor right away, which is huge, not only from the standpoint that it makes the trade that much easier to manage and gives you confidence in not only the system but yourself as a trader, but also if you're an options trader, and I saw many of you on here were, that is huge, because as you know, if you get into a trade and it goes against you immediately with options, to make back that lost premium requires a much bigger move in your favor. But when it moves in your favor immediately, you're going to profit right away, and it just makes the trade so much easier to manage. Here's another one here. A couple of different setups here and here. Okay? Very clear signals. And a very nice move, again, to the downside.
I'll let you get back to your presentation, Vince.
Okay.
Once you finish, we will come back and continue to do more stock symbols. We'll also do Forex and some futures as well,
sure,
just to show you that this works on everything.
And we'll answer as many questions as we can for you. Let me just bring up my live charts for some reason. Oops. There we go. Oops, sorry. Let me go back to... Why is it not coming up? There we go. Okay. Sorry about that. Let me zoom in here. I just want to recap what we've gone through today and show you. So far, what I've shown you is a system that will work on any market. Again, stock, option, futures, Forex. I'll give you more examples in a while. And any price level stock, the monster stocks, the Googles, Amazons of the world, and we've traded this with $3 stocks. It really doesn't matter. Again, it's very simple and easy to spot on a chart. It can be used as a standalone system or a very good complement to whatever you're trading with now. Okay? As you've seen, it tends to move in your favor immediately. And the majority of the trades that don't work out are not even losers. They're just negated trades or disqualified trades. So it is a very, very effective system. Now, as I mentioned earlier, there are ways where you could really enhance this system. Unfortunately, it would take me a couple of hours to show you that, so I can't do that today. But on Thursday, December the 4th, 7 p.m. Eastern Time, we have our pro class. I'll be teaching this class. It's a 2-hour class. Okay. The event will be recorded if that date doesn't work for you. But during this class, I'm going to be showing you the full system from start to beginning with, or start to end with exits strategies as well. I'm going to show you 5 different exit strategies that we use with this, but the one main one that works extremely well. But more importantly, I'm going to show you a unique way of adding support and resistance to this that really improves the accuracy of this system. I'm also going to show you how we trade it with options, exactly and where you want to throw in a credit spread versus a long call or a long put, where you can trade an iron condor with this, etc. And together during that session, we're going to do a full scan for real-time trade setting up that coming week so that we can all walk away with some trades to place. Okay? And as a bonus, what we're throwing in here today is our course on the Ichimoku Cloud. We usually do this as a separate event completely and sell it for $297, but we're going to throw that in during that class and show you exactly how to use that indicator on its own as well. The link for this class is tradingwins.com/move, M-O-V-E, and this is what you're going to get. You will get a recording of the previous pro class as soon as you sign up, so that you don't even have to wait till December 4th. And Raul, we can get this out later today. Is that possible? Or,
yep.
or maximum tomorrow? Okay. Within 24 hours, we'll get this recording out for you. And for a couple of reasons. We want you to not only be able to start using this right away, but also to watch it a couple times if you can before the class, and make any note of questions you might have and bring those to the class. We are also, in addition to that, going to save you a spot at the live class on December 4th, okay, and also send you the recording for that. And also, we're going to throw in a 30-day membership to our pro service here at Trading Wins, which every Sunday to Thursday evening, we record a video where we'll recap the day's events in the markets, talk a bit about where we think things are going to go, and we review our open trades and highlight new trades setting up. And we also send you trade alerts whenever one of our traders here at Trading Wins is taking a trade, so you can look over our shoulders and see what we're doing. Now, together, this is a $988 value. But in the spirit of Black Friday, we've come up with an incredible offer for you. For anyone on this webinar today, it is only $97, okay? Again, the link is tradingwins.com/move. Now, we do have to restrict this to the first 25 people, and the reason being is the class is 2 hours long. It typically already goes closer to 3 hours, but the whole goal of that class is to teach you the full system and answer all your questions so you can walk away from that session and trade this like a pro, okay? And for us to be able to answer all those questions, we really do have to limit the number of people there, okay? So again, not only am I going to show you the whole system, I'm going to show you a very unique way of adding support and resistance that really, really improves this, show you how we trade it with options. We're going to do a scan together, hopefully walking away with several real-time trades. And I'm also going to throw in our crash course on the Ichimoku Cloud as well. Again, it's tradingwins.com/move.
It's awesome value. Spirit of Black Friday. It's better than the 1,000-inch TV that I was going to buy.
There might be a couple left. You might still be able to get.
I don't think so. With that kind of pricing, I'll get stabbed first. A couple of questions for you.
Sure, go ahead.
With the Ichimoku Cloud, do you use the default settings or do you change those?
No, I use the default settings, absolutely.
Vince, this is from RT. What percentage slope do you consider minimum level for a strong trend?
Again, typically I like a 45-degree angle. I mean, you're not going to go and measure that exactly, but the stronger the better. The real way you want to use that is on any given night. When you do your search, you're going to have several trades to choose from. So that is one of the ways to pick out the one or two best. Is the more significant the slope, the better. There's a couple other things you can look for that I'll go over in the course as well. But yeah, the higher the more significant that slope, the better.
Abraham's asking, which candle do you use for the setup bar?
Well, the setup bar is the candle where the RSI crosses from one side of the 50 line to the other. That is the setup bar. The trigger bars with, when it actually breaks the high of that setup bar for a long trade.
Ivan's asking, I know we've had this before, how does the strategy work in smaller time frames? I know the easy answer is very well.
Well, yeah, it does very well. And again, the main ones where we use it most is the 15-minute, the hourly, and the 4-hour.
All right, we've got 11 minutes left. Most popular question, where do you exit?
Well, again,
can you do it in 11 minutes?
No, I really can't, because I wouldn't do it justice. There's many different exit strategies, but really what we encourage is that you trail your stock, you scale out, and we're going to share with you during the pro class the 5 methods we use, but the one main one that we have proven over time to keep us in trades for the bulk of that move.
All right. Can you provide the RSI parameters again?
The RSI parameters? Sorry, the RSI parameters.
That's from Joe.
The default settings are 14. We switch them to 7. We move that down to 7, and then rather than plotting the overbought, oversold lines at either 70-30 or 80-20, what we do is just plot a line at the 50 level. So it's the RSI 7 with a 50 level line.
All right, man. Carlos has this very complex question. I'm going to read it to you exactly as it is. Carlos, thank you. Sometimes the slope of the MA is deformed by the scale of the graph. How many bars are recommended to have in a chart to appropriately evaluate the slope of the 20 MA?
Really, you don't need a certain number of bars, especially when you already have that slope crossing from below to above the cloud or vice versa. For example, I guess a good rule of thumb would be about 20 bars, but you don't really even need that as long as you have that slope. Just, you do have to be careful with how how small or how large you put the chart on your screen, but that is another reason why we like to keep it clean and only have one indicator on there. If you're piling up indicators, you kind of squeeze the top part of your chart and it kind of deforms it all. But keeping it as clean as we do, it's fairly straightforward.
Jorge says, thank you. This looks great. Really easy to understand. Thank you, Jorge, for the nice comments. I want to say thank you to Ivan, to Linda, and to Thomas for joining. Really appreciate it.
Great.
Looking forward to seeing you on December the 4th. The link again is tradingwins.com/move, M-O-V-E. You can also call us, 1-888-574-2426. The fellows here are working on Black Friday, but if you don't get them, just leave them. They will call you back. Vince, how is this different than some of the other strategies that you've taught in the past?
A lot of the basics are the same. Most of the systems we teach are based on trend and momentum. So a lot of that is the same. Obviously, different indicators we're using here, and with the settings, it's just a little more responsive that way. But when I show you how to add the support and resistance technique and trade this with options, you'll see just how well this performs.
A lot of people are asking, will you teach us how to scan for these setups in the pro class?
Yeah, absolutely. We're going to do a scan together. Okay, so you'll watch me do a scan during that class, and I'll share with you my watch list, the watch list I use on a regular basis for this. But I will definitely do a scan. I see there's a few other questions.
Is the cloud available on eSig or multi-charts? Do you know? You use
yes, I believe it is. Yeah, definitely on eSignal,
Okay.
and I believe it's also on multi-charts.
The subscription, the 30 days pro membership. Just mention again what you get with it, and
sure.
what happens at the end of the 30 days.
Sure. So Sunday to Thursday evenings, we will record and send you an email, a video, recapping the day's actions in the markets and telling you where we think things are going. We recap our open trades, highlight new trades setting up. You will receive a trade alert by email whenever we issue a new trade, and that membership is normally $97 a month. You'll receive 30 days free membership, and at the end of that, it will automatically renew at the $97 price point. But if you'd rather not, for whatever reason, just give us a call and we'll cancel that ahead of time.
Max wants to know, would this work in conjunction with fibs?
Oh, yes, absolutely. Absolutely. And in fact, in the last class, I think in that recording, we talked a bit about that. That same question came up in the last class, I believe. And I actually showed you how I would use the fibs with this. Yes.
I've got a lot of people asking about CRM. Can you take a quick look?
Sure.
Then I promised everyone we'd do some futures and some Forex pairs as well.
Okay, let me just bring up my charts again. CRM, says. CRM. Okay, so CRM again. See, I mean, for me, it's very quick and easy to spot. And if you spend a bit of time looking at the charts, it'll be the same for you. Look at this. So you're moving from within the cloud pretty much back out above here with momentum. You see the slope on the 20 right here? And then once you have that, so you have trend in place, you focus your attention now on the RSI and you wait for that pullback. Okay, what you get here, and right there, I'll highlight it for you. Right in here, you had actually multiple entries right here, and off it went. Very nice move. Same thing here. Again, look at the sharp turnaround in this stock, and that significance of the slope tells it all. You're crossing from above to below with strong momentum on your side. So once you're clearly in a downtrend, so the bars and the moving average are both below the cloud, you focus your attention on these pullbacks on the RSI, above and then back below. And there's an entry there, and an entry there, and an entry there. And if you were to put your stop at just above the most recent high, off it goes. And then it's just a matter of managing that trade and trailing your stop. So it works very, very consistently.
I want to say special thanks to Paula, to Nadia, and to Jacqueline for joining us. It's 3 women in a row. Does your wife know about this?
Yeah. No, but actually, it's funny you say that. I mean, when I first started trading, there were very few women in the industry at all, and now there's many, which is great to see.
It's amazing how many of our clients,
yeah,
you know, it's almost getting to be almost like a 50-50 kind of a breakdown.
It really is.
And
it's great to see some great traders. And we met a few recently who have been doing extremely well.
That's excellent. All right. Forex pairs, U.S. dollar, Japanese yen.
Sure. Let's have a look. USD, Japanese yen. Again, none of the settings change. It's all the same. And again, all you're looking for is that trend and momentum in your favor. You see here on this pullback, unfortunately, it pulled back too far. We lost momentum, so there was no entry. And this is going to happen. Now, of course, if you're a more aggressive trader, you could decide to take a trade like this if you're okay with the level of risk, because your stop will go just below here. But I wouldn't recommend it. You know, if you just stick to the rules, there'll be plenty of setup. So even though you miss runs like this, that's totally fine. Let me move down to a different time frame here. Let's look at the 1 hour, stretch this out, and see if there would be any entries here. Okay, I see one right there. Okay, so you see here, okay? So momentum's on your side here, and trend. You get that dip, and there it is right here. And look at that run that it kicks off. Beautiful. Again, along this stretch here, once you move from above to below the cloud, as long as you have that momentum in your favor, there's plenty of pullbacks, one here, that will get you in these trades. Okay, so it works again any time frame, any market.
We've got about 3 minutes left. I want to say thank you to you, David, not to you, but to this gentleman, you, David, Nora, Eddie, Tyrone, and Jacqueline. Oh, no, we've mentioned Jacqueline already, and Troy, for signing up. We're getting close to that 25-person limit.
Excellent. Thanks.
That's excellent. All right, another Forex pair. Larry wants to know about the Australian dollar, New Zealand dollar, please.
Australian, New Zealand. Okay, so since I'm already on the 1 hour, might as well pull out here, show you that. So, okay, let's see, not much to see recently. No. Okay. There's a trade down in here and in here. There was a nice one here. on the 1 hour for the Aussie New Zealand, and let's go to the daily, and let's see more recently. Here's one here where this is what I mean by you don't have to, it doesn't have to dip below the 50 by a certain amount. It just has to come back and touch it. And there was a nice double dip right here which kicked off a real nice move in the Aussie New Zealand recently, right here. And again, looking further back throughout this move lower, there are certainly opportunities to enter here as well. Okay.
Last one, Sam, silver.
Silver, let's look at silver. So silver, again here, dropping, excuse me, but you can see right here, here's another perfect example of that little kiss on the 50, and it kicked off a great move lower. Again, what do you notice? It tends to move in your favor right away. And remember, if it, for whatever reason, had traded above the high of this bar first before the low, the trade would be negated. That's what really eliminates a lot of the risk with this setup, okay? So most of the trades that don't work out are not even losses, yet most of them tend to move in your favor right away.
Okay. Leah, Troy, Joanna, they all want to know about gold. Can you go through it quickly?
Sure.
Time's almost up.
Sure. Let's see. Gold. Again,